Invicta is a supplier of engineering consumables trading as BMG. It's also a supplier of capital equipment in Southern Africa and Asia.
And it has a supply business, building supply business, Tile Toria. So that's a bit of an interesting combination of businesses.
Market cap is 5.7 billion rand, a PE ratio of 14.6 and a dividend yield here of 2.7%. Invicta, do you look at this one closely?
I do. I like the management team, I like the business, but they've been in exactly the wrong space at the wrong time. A perfect storm of negative effects on their business lines, whether it is the infrastructure and manufacturing headwinds we've spoken about, or on the capital equipment side, the drought we've had in South Africa, so less tractors and combined harvesters being sold. Building supply is not quite up to scale yet. There's some exposure to Asia, which has seen a slowdown. Plus, they paid that big special dividend and did a capital raise at the same time to make sure they use all their dividend withholding credits that they had on the balance sheet. And through that whole process, a lot of people got concerned that maybe the way it was done wasn't the best for the business. It was maybe better for shareholders. So it's a business that has had some tough times, very tough times as of late, but a very good long-term track record.
The general theme here, of course, Paul, is the underlying economic environment, which is having that knock-on effect into the industrial space.
Because Bearing Man's main customers, because they sell belts, bearings, and all sorts of industrial consumables to the power stations, to the mines, that kind of thing. So that's all been not good. Take a look at this graph, though, because it goes all the way up and it's come all the way down. It was a market darling on the left-hand side of that thing.
Look at where it peaked in 2014.
Yeah, that transaction that they did where they paid a big special dividend and then did a rights issue was partly also to re-engineer their empowerment credits, because they wanted the empowerment entities that they'd partnered with to be active only in the Southern African business and then to have the other stuff in Asia and so on outside. So yes, but remember, when we talk management, we're talking about Arnold Goldstone, who's sort of semi-executive. We're talking about Christo Wiese, whose outfit owns 30% of this. Remember, Christo Wiese is supposed to be...
There are not many people out there who are going to bet against Christo Wiese.
Yeah, you invest with him, you're supposed to make money automatically. Isn't that how it works?
Is that a strong enough underpin, Christo Wiese, to the Invicta story?
It's an important underpin, I think, where, for instance, I think people know that you won't have any balance sheet issues with the business when you have a big shareholder that can always stump up more capital if needed. Not that they have any issues at the moment. But yes, I think having someone like that as an anchor shareholder is a positive. And the management themselves have historically done very well in terms of their capital allocation. It's just that the environment is so tough at the moment.
Yeah, Charles Walters is actually the guy who runs the business. Wayne Taylor, some of the other guys operationally.
Are you going to call it?
Look, the Tile Toria business is actually doing quite well. I think that was the star performer, but a combination of the infrastructure slow down, that's the term I'm looking for.
I'm glad you're at least admitting that there is a slowdown in the economy.
So you can see that the different parts, but I think they will work on being where they need to be. They've always been very good capital allocators in the past.
Are you about to admit that we aren't in a stable GDP phase?
Well, you know, there's a lot of mixture going on here. I'm conceding the next company is a better example of what I was going to talk about.
Hot or not?
No, not hot. I think it's going to be a bit of a wait.
It's an interesting one because I do think that even though everything's negative, a lot of that is in the share price. So it's one of those interesting ones where the outlook is dire, but the share price is cheap. And that's the most difficult decision as an investor to make. In this case, I would say it's short-term in nature. The cycle will ultimately turn with a very good track record, a stable, quite strong balance sheet, and a very good management team. I say hot.